Gold prices steadied at 7-session highs on Monday after rebounding into the weekend on expectations that U.S. interest rates will be cut sooner and deeper thanks to shock weakness in U.S. jobs data, plus a new attack on Federal Reserve Chief Jerome Powell by President Trump. "No one can be that wrong. We need accurate jobs numbers," said Trump on the social media platform he owns, firing the Commissioner of Labor Statistics and calling again for the resignation of stubborn moron Powell after Fed Governor Adriana Kugler suddenly announced she's stepping down from the central bank 5 months early. Trump on Friday also announced the deployment of 2 nuclear submarines near Russia amid a social media argument with senior Kremlin figure and former Russian President Dmitry Medvedev. The spot gold price in London today edged up 0.1% to $3,367 per troy ounce, extending Friday's $65 jump after more than reversing last week's earlier drop. Gold's rally began after the Bureau of Labor Statistics said the world's largest economy added just 73,000 jobs in July, its weakest print in 5 months, with the prior 2 months' growth revised down by nearly 260,000, pushing up the unemployment rate to 4.2%. Friday also saw President Trump roll out the steepest U.S. trade tariffs since the 1930s Great Depression, pushing the overall effective tariff rate to 17% according to analysts at ratings agency Fitch. Friday didn't disappoint in its chaotic spread of headlines, says Nikki Shields, head of metals strategy at Swiss Bullion Refining and finance group MKS PAMP, pointing to the expected news of Trump's tariffs, the unexpected news of Kugler's Fed resignation, and extreme price action in gold. The odds of a September rate cut from the U.S. central bank, seen as a 63% shot this time last week, have now risen to over 85%, according to betting in the futures market tracked by derivatives, exchanged the CME's FedWatch tool. From there, Fed rates are now expected to finish 2025 at 3.77%, more than a quarter point lower than the futures market's forecast only last Thursday, marking the steepest 2-session drop since the FOMC revised its own end 2025 forecast to 3.9% last December. This is the lowest such prediction since early July. Having repeatedly called on Powell to cut rates or quit, "I have an open spot on the Federal Reserve Board," Trump said Friday about Kugler's resignation, saying that he's very happy about that, while alleging that the academic economist and former policy advisor quit due to disagreements with the Fed chair. 2 of Trump's own Fed appointees, Christopher Waller and Michelle Bowman, last week voted against the July meeting decision to keep the Fed's key interest rate steady, calling instead for a cut. Fed Governor Adriana Kugler was absent from the vote. "Markets value central bank independence, at least around the setting of policy rates," says Dan Everson, Chief Investment Officer of fund management giant PIMCO. Although there's always tension between policymakers, any attempt to reduce independence would be very bad for markets. Please like this video and subscribe to our channel.